Hey, Steve Zonardo here with Remax Experts, Zonardo Associates. Happy Monday morning. As we like to start our week, we want to know about inventory. So currently right now we're at 16,233 units available with 786 selling. Again, these are very similar numbers every week after week. We were expecting a little bit more inventory going into August because of summer months. It kind of stayed status quo with the last 2 months, I would imagine, into 16,000. So let's see what happens in September. We're only a couple days away. We'll see if that ramps up going forward when the kids are back into school. What we're seeing now with the market is we're carrying, I think, 11 listings currently right now. We sold a few. We got a few offers in on properties last week, and we did some major price adjustments on 2 listings. So one of those listings we had, our last showing was August 7th. We did a massive price adjustment, and then we got 5 showings in the last week, another one today. So you can kind of see that there's still buyers out there, just price related. Then we have another listing. We did a price adjustment, but it's obviously it's still a very good price for the property. It's just in today's market for affordability, it's just going to cause a big issue because it's in the higher echelon in pricing. So that's another thing we need to contend with. We got to just kind of sit tight and wait. We have another listing that's in the 3 million range, and that one's still pushing pretty good. We had an offer on the table last week. We were, I think, like $100,000 away on a $3 million property. Is not a very much. It's like $10,000 on a normal property. So ultimately, we'll figure that one out. Hopefully, we can get those buyers back on the table because it did die out, and get that one sold. I want to talk about the current CPI. I mean, let's go into this one article here. These articles are very hard. Let me just close this door. They're very discouraging for any kind of buyer when you start seeing stuff like this. Canada likely sitting on the largest housing bubble of all time. And these things just keep getting pumped out. And it says here, and this is something I've been talking about forever, it's just the level of debt that Canadians have taken on in comparison to their incomes has put many in precarious positions should mortgage rates continue to rise, which is likely. This is Philip Colmar, partner at the Global Strategist MRB Partners, told BNN Bloomberg on last week's interview. So Canada's probably sit on the largest housing bubble of all time. Colmar argued that the inflated home price in Canada are a result of 2 decades worth of easy money supplied by Bank of Canada's monetary policy for numerous reasons at the present moment. He sees risk in mortgage rates climbing as Canadian bond yields are dragged up, particularly at a time when debt to income ratios are sky high. Debt to income. This is one of those. I always kind of go through this on other analysts' websites there, where it's like we're basically every dollar we spend or every dollar we earn, we're spending $1.80. It's the second most leveraged country in the whole world. And remember, Southern Ontario, that's where all the debt is, and maybe Vancouver, but more so in Southern Ontario compared to, let's say, the other provinces in Canada. So we're holding all this. The debt to income is the highest in definitely Southern Ontario. He said the worst part for the housing bubble is when you have a credit bubble underneath it. Yeah, of course. So there's a whole bunch of stuff. So credit bubble underneath the housing market is obviously more debt, just debt piled upon debt. And this is why we had our little mastermind meeting we usually do once a year. I usually do it in December. Good friend of mine, Mike's obviously is involved in this one, and we had another friend that come with us. And then, fast forward 2022, I started unloading a shitload of assets. I think it was like $7 to $8 million worth of real estate, and it was just in lieu of what was going to come down the pipe coming forward, like the high interest rates, property value loss, and also we were looking at it like quality of life. Like, why am I going to hold a depreciating asset? It didn't make sense. So I rather unload it, cash out, and then for the first time since I was 19, I actually stuck money in a GIC. And again, this is like you got to be able, and I hate using this word because it's used so often. It's pivot. You got to be able to move around. What's the best option at that point? If you're going to get a 5% return on the money you cashed out on a property that's actually in a depreciation state, why not cash out? Unless it's like something that's got, like I always mention, if it's got something for future investment, if it's land or it's a property that's a duplex, triplex, that's just obviously a really good piece of real estate, or there's opportunity to develop in the future and build out. But other than that, you should just unload and just cash out and kind of wait, right? And then you'll buy better real estate at that time. So let's keep going here. So as they're mentioning here, that the credit that the interest rate will more than likely hike in September. So we know that the Bank of Canada is going to be meeting on September 6th. This is the interest rate announcement. And then some people are saying, well, they can't raise it anymore because it's killing us. We have this massive debt. They don't want to destroy the market any further. But remember Tiff Macklem, what he said. He has to bring down the inflation in order for this economy to go on. So their target rate is 2%. So what happens is we went down to 2.8%. That was in June, right? And then July, we went back up to 3.3%. So we went up another 50 basis points from our 2.8% in, let's say, June. What are they going to do? They got to curve that inflation. So they're going to jack up those rates again. So clearly, whatever they're doing is they have to just keep going in order to kind of correct things. And also remember job loss. We kind of reported last week that job loss, 42,000 jobs were lost. Construction jobs were lost in July. Like, that's huge. I mean, I was a construction worker. I know a lot of, usually it's you're making great money, probably 70, 80, 100, $120,000. So a lot of that income, 42,000 of those construction workers are laid off, don't have a job, or if they're going to find somewhere else to work, I'm not sure. But as we know that even new construction, especially new construction low rise, is having a tough time selling properties. You're not seeing a lot of sales happening. And depending, because now we're talking to our friends that we went to our mastermind meeting that in East Toronto, like Scarborough, Pickering, stuff like that. There's still a lot of purchase happening, even on low-rise construction. But when you come down to our end, it's totally dead. So where are these construction workers going to work? There's going to be definitely a gap with the sales. Usually they sell and then they build. They sell and they build. They have like this whole, flow of work because of past sales. But now if there's no sales, where is this work going to happen? There's going to be a gap. Do people change careers? Do they, maybe go into high-rise? Because high-rise is much more of a longer project. If you're clearly, if they're breaking ground, it's like a 2-year project, and I know there's a bunch of condos still that are breaking ground as we speak, so that might be work there for construction, like a low-rise construction work going to move into there. But at the same time, I don't see those condos moving quite well either, so it is what it is. That's pretty much it for today, guys. If you have any questions, please reach out. I'm always here to take your calls. Have a great day.